Long-term investors will have noticed that we have been chalking up some milestones in recent years. 70 years in business, our 12-month term account passing its 20th anniversary as a strategy, reaching over 500 employees as a business, and the La Trobe Australian Credit Fund that has now surpassed $9 billion in assets under management and continues to receive the support from over 91,000 investors. As the credit fund marches towards $10 billion in assets under management, we reflect on the fact that the foundations of our business were built to ensure we stay in the best position to deliver on our proposition. That is, remaining good stewards of investor capital across all stages of the economic and market cycle and providing that low volatility, consistent monthly income to you, our investors. We remain hyper-focused on ensuring that our portfolios are constructed with great care and great discipline to continue to support the impeccable history of performance we have delivered across 33 years of our fund, and perform our portfolios have continued to do in recent times. Driven by that ongoing performance, we are pleased to have recently announced yet another increase to our distribution rates. The rates of our investment accounts, effective from the 1st of June, are on screen now, with each of our portfolio accounts enjoying a 25 basis point increase effective from the 1st of June. And that's headlined by our 12-month term account, which will now have a headline return of 6% per annum. These products have demonstrated their proposition as genuine, inflation-responsive income generators for our investors, something that we take great pride and care in delivering. As always, we keep a close watch on markets and respond accordingly. Through this lens, you may recall some volatility in markets as the demise of the Silicon Valley Bank played out. At that time, we were active in the capital markets and were able to price and settle a $1 billion RMBS transaction. As always, we received tremendous support from local and international investors, which allowed us to twice upsize that transaction, even against the backdrop of broader market volatility. We likewise responded within our credit fund, with our classic notice account tilting into an overweight cash position, from about 12% cash to close out February to about 39% liquidity at the end of March, a powerful sign to the market of our ability to meet any potential liquidity demands. Of course, the volatility in the banking sector did not translate to investor activity here in Australia, and with much of that volatility having washed through the system, we have taken steps to carefully reinvest that cash back into mortgage assets. The La Trobe Financial business is uniquely placed due to the diversity of its funding, and this is important during moments of market volatility and is to the benefit of all of our investors, allowing us to generate the highest quality assets as we construct and manage our portfolios. Finally, to performance, and through the lens of borrower arrears, our portfolios continue to be in really good shape. Each of our portfolios ended 2022 at or near the lowest ever arrears observations. And now remember, this was a full year into an inflationary event and 7 months into a rate hiking cycle. So a really powerful performance. Fast forward to now and arrears are normalising back towards their typical longer term observations. Arrears remain low and controlled within the 12-month term account, for example, concluding April at 3.3%, which is at the low end of its historic observation bands. We continue to hold high conviction in the performance of each account and the ability of the underlying assets to continue to deliver low volatility, consistent monthly income for you, our investors, and that's right across the economic and market cycles. We thank you for your continued support, and if you have any queries from this update, please call our friendly asset management team on 1800 818 818.